Real Estate Pro Talk is a live radio talk show dedicated to educating its listeners on the entire spectrum of real estate matters. Part of the American dream is owning a home or investment property, or perhaps even becoming a real estate agent yourself. Paul Vanas and his team of real estate professionals have over 250 combined years of experience in the industry. In other words, we can make it happen for you. Why go down the road less traveled when we can put you directly on the real estate superhighway? Whether buying or selling in today's complicated real estate market, or if you just need advice about jumping into the real estate business for a career change, you'll need a decisive edge based on experience. Call Paul Vanas at 401-265-6144 for a free, no-obligation consultation. That's Paul Vanas at 401-265-6144.
Good afternoon. My name is Paul Vanas, and this is Real Estate Pro Talk. Real Estate Pro Talk is a real estate-oriented program which will cover a variety of topics every Friday afternoon from 3 to 4 p.m. on WOON Radio. Some of the topics we'll be talking about during our time together will be how to buy and sell a home, how to choose a real estate agent, home inspections, creative financing, flipping real estate, how to develop a piece of land, and private mortgage financing. I've been in the real estate business coming up on 40 years now, of which I own a real estate brokerage company, a real estate school, and a land development company. All of the knowledge that we are going to try to impart on you today is based on the continuing education classes that I teach licensed real estate brokers and agents, along with my personal experiences and those of our expert guests. The goal in doing this is so you'll have the information in hand when you meet a seasoned real estate professional. You're welcome to call us today at 401-766-1240 and ask any questions on the subjects we'll be discussing. And, of course, after the show, you're welcome to call 401-265-6144, which is my personal cell phone, and I'll be more than happy to address any concerns you have. And I'm happy today to have a guest with us. Our guest today is John Somyk of Keller Williams Realty, leading edge in Lincoln, Rhode Island. Say hello, John.
How you doing, Paul?
I'm very good, very good. John not only is a real estate broker with his own company and has many real estate agents working for him, John also does private money lending, and we're going to talk today about some of the advantages of why one should use private money lending as compared to going to a commercial bank. And the financial advantages, and not only and the time advantages and the credit advantages, and so on and so forth. So basically, John, let's jump into it. But before we start, how did you get in the real estate business? I always ask that question every week. I ask everyone, how did you get your start in the real estate?
I actually came back from Florida and had nothing to do, and thought it would be a great business. And matter of fact, my first broker I worked for was Paul. Have to share that on the show.
Yeah. So how long ago was that? That was
about 31 years ago.
Wow, that's unbelievable. So you feel any older? You feel any wiser?
Older.
Yeah. Well, it's funny how time marches on. I was talking to someone earlier today, and we had a guest last week that we were talking about. Now their grandchildren of former clients are calling them, and it's just amazing how time just kind of flies by after you hit a certain age. Let's talk about today, John. We're going to talk about some brokerage later on and maybe some flipping property, but I know our audience is always curious about how they get into the real estate business. And of course, a big part of getting into the real estate business and buying and selling houses and investment properties as such is money. You need money to buy the house. You need money for the repairs, and you provide private mortgage financing. How did you start off in that? Is there any
that was a natural progression in real estate, getting into real estate as a broker, then eventually owning my own company. Money lending, developing, building, flipping, that's all the natural progression. People that stay in it long enough will probably be involved with multiple areas of real estate. So it was just a natural progression.
Wow. And that's a win-win for everybody involved, because you get to invest money and get a better return than you would if it was just sitting in a savings account at some bank, right?
Yep.
And the people who borrow the money get the advantage of having much faster accessibility to funds, and based upon what they're going to do in the property and so on and so forth. What type of your typical buyer, when they come to you, what type of properties do they usually want to purchase to use private financing?
I mean, private money has been around. It's called hard money lending or equity lending. It's been around for a long time, but it's really gained popularity in the last 10 years when the market was really weak in the early 2011, 2012. So it's gained a lot of popularity since then. Most people that call are people that are flipping properties, people trying to buy commercial properties, and builders also wanting to construct homes. And I think that's the main area where you see it. Hard money lenders or equity lenders don't usually get involved with single-family homes, owner-occupied.
Yeah.
That's kind of off limits because of all the regulatory information needed, and it's too much. It's too much to do. So most hard money lenders won't touch that area.
So if someone wants to, well, you had mentioned builders. If a builder wants to, I know that can be cumbersome because it's what we do. You have to buy the piece of land, and then you have to develop the plan, and you have to get the building permit, then you have to build the house, and then of course you have to try to sell the house. So that's a pretty lengthy process, usually like less than a year, right?
Yeah. That portion of the loan, is held in escrow. So, typically on a construction, they would give a percentage of the land purchase, then escrow the money needed to construct the home and give disbursements. And that's done usually by the private mortgage lender. I do that myself. Some lenders may use an outside source to inspect the construction. When I do loans, I don't use an outside person for that.
Okay, so you don't give everyone the whole enchilada, as they say, at once. You give them as much money as they need to bring the project up to where they are. So, for example, after the foundation is poured, you may give them a disbursement, right? And then after the house itself is framed or so, you give them another disbursement. And then as it progresses, by the time the house is completely done, you've given them a number of, maybe 5 or 6, or how many disbursements are they usually? I
mean, that's typical of, 5 disbursements in a construction project. But in some cases, they have enough equity in the project where I'm giving maybe the last 2 disbursements because they had so much of their own money into the project up front that they don't need it. The ideal client would be somebody that has some cash in to invest into, whether they're doing a flip, new construction, or some type of commercial purchase.
So that's the new construction side. So you just mentioned a flip. So for our audience who don't know what a flip is, obviously a flip is a street term for buying a piece of property, fixing it up, putting it back on the market, and hoping to sell it for a profit. So you finance those types of projects, correct?
In the last 9-10 years, that's been the primary source of people looking for money, because there's been a lot since the last recession, which the bottom was probably around 2011. There's been a lot of value in real estate built since then, and a lot of homes at that point were foreclosed on and left in rough shape. So many investors got involved in fixing these places up.
So it's a lot easier to go to a private person than to go to go down to the local bank, because the local bank, as you mentioned, there's constraints that they have to work, regulatory constraints that they have to work within, where a private financing individual does not have those same regulatory constraints. But you use other criteria to make sure that the loan is going to be worthy, right? So, do you look at? I'm sure you look at the end value of what the property is going to be worth, correct?
Yeah. The few things that I look at is, first of all, the first premier thing that I'm looking at is the project viable. So in a lot of cases, I would say there's a small percentage of loans I turn down, but usually the people are thankful for it. They're not angry at me for turning down the loan. I'd like the person to look at, whatever they're doing as a profitable venture. If it's not profitable, and I see that up front, I'll educate them as much as I can on the project.
So you want them to make,
Of
them
course,
to be
it's
profitable.
only a win-win if everybody makes out on this. So if I get something across my desk that does not make sense, I'm going to try to talk that person out of that purchase. And it happens once in a while, and it's just not worth for me to get involved or for them. If they can only see a small profit in this with a large amount of work, it's just not worth doing.
Right, and I would think that's where your real estate brokerage experience comes in, because you have a finger on the pulse of what the market is doing in general.
Yeah.
So you know exactly what an 1,800 square foot colonial on a certain street should sell for, and if they have these pie in the sky expectations, which everyone does. I notice like a lot of people use these websites now, like Zillow, and some of the sites that kind of guess what the value of the house is. And I know I tell everyone that don't even pay any attention to those websites, because there's so many different variables and algorithms. I find when you go to Zillow and you put in a house on a main road, it'll give you the same price as a house that's on a back street, and everyone knows houses on main roads usually sell for a little bit less money than the houses on the back street. So they must be doing the same thing. They're coming to you with this number. Oh, John, Zillow told me this house is worth $350,000, and then of course, based upon your brokerage experience, you have to then say, well, let's pull it back here a little bit. Let's look at some real comps, not some computer generated comp, right? And then, of course, you have to be the bad guy at some point and say, well, it's only worth 310 or something. I'm just making up numbers. Is that basically the way it goes?
Well, you and I are from the Jurassic period of real estate, so I still use the method of going into the MLS system to look at comparable properties. But it's more than that, like you said. Specific markets within towns. There's a lot of variables within one specific area. You could say the city of Woonsocket has areas that are higher value than other areas.
Sure.
So that real estate knowledge helps me do my job, but it also helps me deal with a consumer coming in looking for a loan or a property to determine if it's going to be a project they should look at. And usually through the process, not only they learn something, they're usually not upset about it.
Right.
They would rather walk away and not get involved with something that's not going to turn a profit.
And that makes perfect sense, because that's advice they wouldn't get elsewhere. Usually when you go to and it's happened to me in the past, you apply for a loan, let's say, and if the property doesn't appraise, all you do is get a letter in the mail that says, sorry, thank you, loan's not going to work. They're not educating me on why the loan didn't work, or they may tell me verbally or something, but the bottom line is that
Yeah, I hold their hand when I deny them.
No, I mean that's great, because that's important, because that's how you develop the relationship. Because I'm sure a lot of this is referral, right?
It's all based on referral. I really have no website to attract customers.
Yeah. So if you do one and business, you both profited from one transaction, and then all of a sudden they pop up with a different transaction, and it makes it a lot easier for you now, because you know the person that you're dealing with, and they know you, and so on and so forth, I would think. What's the biggest type of property that you find people want private money for? Is it a single family, multifamily, condos, all of the above? Or?
Well, a few years back, it was all single family investor properties that they were flipping. Now I'm seeing more new construction and multifamilies and commercial, probably a 50-50 mix now. The reason being, there's less deals to be had in single-family homes where they can purchase it and turn a profit on that. So we're seeing most of the lending now is headed toward commercial, new construction, and even multis, just investors buying multis and, let's say, fixing them up and then refinancing them in a year.
I see.
Because, again, private money is a great format for an investor because it's a lot less painful than dealing with banks, a lot less paperwork, very quick turnaround. So an investor could, identify a property, call me up, talk to me about the deal, and get an approval within a day in most cases, and therefore making an offer very quickly on the property and closing on it. And that usually turns into a good price.
Yeah.
An investor that can move quickly rather than waiting 30 days, 90 days, whatever it is from a bank that can move quickly is always going to be in the driver's seat and be able to probably get the property cheaper than somebody who has to deal with a bank and subject to every other inspection or whatever.
Sure. And that gives the potential buyer, a lot of leverage now, because it's almost like they have the approval in advance, so they can go in, and it's almost like a cash deal to them on the other side, right, with the seller?
Yeah. And a lot of real estate brokers know me, so if I like the deal and want to go forward with it, they might ask me for a letter, but most of them don't. They just trust that I'm going to close on the deal. So it was advantageous to a lot of purchases out there.
I see. Now, usually, and correct me if I'm wrong, one of the major terms that most hard money lenders look for, private money lenders, whatever you want to call them, there's different names for lenders, private lenders. I used to call them Uncle Leo. My Uncle Leo was the one that...
I actually have an Uncle Leo.
I did too. And, you went to see Uncle Leo. He still had that first dime that he made on his paper route in 1943. It's still in a box on top of the chest of drawers in the bedroom. But most of the time with private lending, this is not for people who are going to live in the house, right? This is strictly for people who are going to...
No, this is absolutely for investing, in real estate. It's not for owner occupied. Matter of fact, you sign a form saying that you won't ever move into the property. I shouldn't say not ever move in. You won't move into the property while you have a ongoing loan.
That makes sense.
A lot of times somebody will buy a property, a flip or a multi, and want to move into it. What they'll do is they'll use a loan, hard money loan. They'll purchase the property, fix it up, and then refinance 12 months later, and then move into the property with a bank. A lot of times the condition of the property won't, allow a bank to finance it. So they have no choice either to pay for it cash or to use an equity lender or hard money lender.
And that makes perfect sense because, I know the house that I live in now, I originally bought that with the intention of flipping it, selling it, fixing it up and flipping it. But the market kind of went down a little bit while I was in the process of doing that, and I ended up living there. So what you're saying is that if you provided financing on that house, the person who owned the investment would then have to refinance out of it, right, with a regular loan, and then therefore you'd be free and clear of that project, and they'd have a regular 30-year or 15-year mortgage.
Yeah. So the areas that I'm looking at is, since it's equity-based lending, I'm not too concerned about your credit, even though that is favorable. I'm looking at the equity in the property. So if a property is worth, let's just forget about loans or anything else. Let's just say it's $100,000. I'm probably going to give a loan around $70,000 on that property, where you'd have to put in $30,000 of your own money. That's one of the criteria, having equity in the property. But I also want to know the end game, what your plans are. Are you planning on holding it to fix up, to refinance with a bank, and then moving in? Whether you're putting it back on the market. So, some of my advice comes in. If somebody wants a house and they want to come in, and even if it's there, by the time they're done, they're, ahead of the game or market value, I'm not going to say too much if they eventually want to live there and that's their goal because they just love that house. But if somebody wants to be profitable on this, which a lot of the customers do, that's when I would inject my opinion and say, well, look at the numbers here. There's no money or there's plenty of money in this deal.
Yeah.
I may offer my opinion.
Is there a certain cutoff where you advise them, if it's a 5% profit, you say, hey, look, you really shouldn't be doing this for 5% to take on all that risk. Is there a certain number, approximate, ballpark? I know every situation is different.
It is different because, if somebody, 5%, I'm probably going to say is not worth it. Just go work a couple extra hours at whatever they're doing to make up that. But It really depends. If it's a project that's going to be a year project, and that's what most loans are, 6 months to a year for equity lending. If it's very simple, very quick project, they're turning it, they have a buyer already, they just got to paint it. Yeah, sure, the profit can be a lower percentage. But if they're rebuilding a place, gutting a place, spending a whole year doing it, I mean that's worth something more. So there should be more profit in that type of deal.
So you not only look at the hard cost of what they're going to do, because you're a licensed contractor, so you know how much a 2x4 costs, but you're also calculating the taxes, property taxes and insurances that would be due on this property from the day of the closing all the way to the day of the projected closing date, right?
Oh, there's a lot of factors. There's when they're purchasing it, if it's in the winter, there's heat. You got to look at a comprehensive look at the whole
deal. I know a lot of people don't think of that stuff, that those little hidden costs that all of a sudden will chew. If you hold a property an extra 6 months, and I don't know, if the taxes are $4,000 a year, that's $2,000 in taxes that you didn't plan on holding, and so on and so forth. And typically the insurances associated with hard money lending are really any different from the insurance one would have to go to a commercial bank?
Nope, same insurance. Everything regarding insurance would be the same.
Okay, wow. So basically, there's a lot of parallels between the two, with the exception of time, because it takes a little time to create a commercial loan, to have a commercial loan go through the process, and which is a huge advantage. Time is everything, especially it allows one to strike while the iron's hot. And the other thing are terms, right? So the terms could be a little different. You were mentioning earlier about credit, someone's credit. You might if someone doesn't have an 850 FICO score or something, you may relax that or look at the things a little bit differently, because there's equity in the property and in the end game, right?
Well, if somebody's coming up with a large down payment, 50% of the value of the property,
right,
I'm not looking at credit at all.
Okay, wow, okay.
So it really depends on the situation. If they're close, they want 70% of the value of the loan or more. Sometimes they'll ask for more. I'm looking at credit a little bit to see what their situation is. A lot of the investors that do this, I've dealt with, on and on. So my rate is generally 12% interest with 2 points. Mm-hmm. Hard money lenders range from 10 to 16%. Mm-hmm. I actually, once I've dealt with you and have done a loan with you, I lower my interest down to usually 10%, depending on the deal. But again, the people that are using this have to look at it at short term. Mm-hmm. You don't want to pay 12% interest for 3-4 years. It's not. It doesn't make sense.
Right.
If you look at it in the short term, 6 months to a year, the actual cost, because we're less for the closing, there's no appraisal. There's a lot of other fees that you're not paying. So on a short term basis, you're very similar. What you're going to be paying is very similar to a bank. When you drag it out over time, it will be more, and that's why I want to know the end game, what somebody's doing, because if it's a 2-3 year project, I probably don't want to get involved, and they probably don't want to get involved with me either. And
that's so important, because I remember my dad in the early '80s when the interest rates were 17, 18, 19%. And I was doing flips. I was hot and heavy into it at the time, and I used to have to tell my dad. And I told my dad one day accidentally that I was borrowing money at like 22% or some crazy number, 21, whatever usury was. That was the number. And my father, he wanted to give me a crack in the head, because in his world growing up, it was all about the interest rate. It wasn't about the end of the deal and what the profit was at the end of the deal. So, I used to say, well, yeah, Dad, I'm paying 21%, but I'm making a 30% return on the whole thing in the end. If I had the money, I wouldn't have to pay 21%, but I don't have the 21%. But even with the 21% payments, calculated in, I'm still making my 30%. And I think there's a certain generation of people that just out of principle wouldn't do that. They wouldn't pay a high interest rate because they're just thinking of the number, the rate. They're not thinking of the whole end game of what you can be making in the end. So that's great that you do that. What are you've done a bunch of these. So have you seen, what are the mistakes common people make, when they buy either a flip or a new construction?
The mistakes are usually coming from a bad purchase. Right from the get-go, it's a bad deal. The purchase, that either paid too much for the property, they didn't figure the correct amount of work for it, they didn't figure out the correct time frame that this is going to happen in. So it's usually a bad deal, and that's what I try to weed out right from the beginning in talking with them. If it's a bad deal, no one wants to get involved with it, especially them. A lot of the people that will borrow from hard money lenders are actually experienced investors that have plenty of money. And it's not a question of that. It just expands what they can do. So instead of doing 2 or 3 houses at once, maybe they can do 4 or 5 or 10 at the same time. They have that extra, more leverage, exactly. Yep. So like you said earlier, speaking with your dad, if there's profit in the deal and it's not too painful to get that, it may be worth paying an interest rate so they can do that other deal.
Absolutely.
If it hits you. For instance, if you had one deal on the table now and you had the ability to pay cash for it, pay cash for it.
Right.
And do the work yourself. But if 2 deals comes across your plate and you don't have enough to do both of them, you may want to call a hard money lender to get that second deal.
And why let it go by? Why
Correct.
let that second opportunity go by when you can double, which is just a little more, a little more expense and a little bit more work, and give you double the profit, which is fantastic. Wow, we've been talking to John Somyk of Keller Williams Realty Leading Edge in Lincoln, Rhode Island. We're going to take a short commercial break, and we will be right back.
Real Estate Pro Talk is a live radio talk show dedicated to educating its listeners on the entire spectrum of real estate matters. Part of the American dream is owning a home or investment property, or perhaps even becoming a real estate agent yourself. Paul Vanas and his team of real estate professionals have over 250 combined years of experience in the industry. In other words, we can make it happen for you. Why go down the road less traveled when we can put you directly on the real estate superhighway? Whether buying or selling in today's complicated real estate market, or if you just need advice about jumping into the real estate business for a career change, you'll need a decisive edge based on experience. Call Paul Vanas at 401-265-6144 for a free, no-obligation consultation. That's Paul Vanas at 401-265-6144.
Okay, and we are back with John Somyk. Welcome back to Real Estate Pro Talk. My name is Paul Vanas. It's turned into a cool, crisp fall afternoon. It was a balmy 70 degrees at my house last night in the middle of the wind and the leaves and so on and so forth. Did you lose power at your house last night, John?
No, we were good.
I lost power at 2 a.m. I live in Lincoln, and of course everything was dark, and I guess we lost it till about 9 o'clock this morning, and my wife was giving me a hard time because if the blow dryer doesn't work in the morning, that's a catastrophe. We're at DEFCON 1 at my house if the blow dryer doesn't work. But John, continuing on with the conversation, do you have like an example of how some of the financing that you've provided people has really helped them in lieu of them getting shot down at a commercial lender?
One of the major benefits up front is the speed. So if you can identify a property, even if it's a property with multiple offers on it, if you can identify that property, make an offer, and be able to go in with a hard money loan or with a cash offer from the beginning and know that you're going to have the backing from a lender, that puts you right from the beginning an advantage to a seller. Seller's going to want to see somebody with less on that offer, not subject to inspections, not subject to financing. That's music to a seller's ears.
Oh, I'm sure.
And that's the upfront, the major benefit. Another benefit is going through the process to make sure it's profitable, and then the last benefit is speed. Close quickly, no aggravation to get money or disbursements. It's very quick.
Now, do you get any borrowers, like, these houses that are on the market that were bank foreclosures that no one bid on the house in the street, so the bank took them back? Do the banks look for terms like in lieu of money, in lieu of getting more money? Do you think the banks are looking for maybe a little lower offer, but clean as is, close in 2 weeks kind of thing, or are they? Has it been your experience that they're holding out for the actual asking price of the house, which may include inspections and all that other stuff?
I mean, you and I have seen every scenario out there, but I would say 80% of sellers or banks are going to look for the cleaner offer. Once in a while, you get somebody that doesn't care and wants the highest number, and that's not most sellers. Most sellers want to make sure the number, if they can afford to sell it at that, or they can recover their money. Speaking for a bank, quickly without headache, is where they're going to go. Yeah,
and that's a good point, because if there's I've learned over the years in the real estate business, in the brokerage side of the business, when you negotiate a transaction, particularly with the sellers, the two most important things in the transaction are the price and when it's going to close. Everything else is fluff. You're going to leave the shed in the yard, the lawnmower is going to stay, the pool and the pool fixtures are going to stay. We'll throw in the curtains or whatever. But I find that closing date is so important, and that seems to be when we have a sale we had Lori Donahue on here a couple of weeks ago from the law office of Glenn Andrioni, and she really confirmed it. When you have a sale and everyone's expecting something to close on a certain day, and then all of a sudden there's a glitch in the system and it has to get extended, it seems like it just throws everything off. It's almost like breaking a promise with someone. You said we were going to close on November 1st, and now you're asking me for November 5th. I've already lined up the moving trucks and the this and the that and so on and so forth. So I think that speed element is a huge factor that a lot of people don't take into consideration. And of course, the speed element too, I would think the quicker, even if it's a new construction or a flip, the quicker someone gets the private money and closes and does the work, they're paying less interest on the loan, and the quicker they can sell the house makes the property more profitable. Correct?
Yeah, we've seen a fairly steady real estate market in the last couple of years at least, but it really makes a difference if you have changes in the market. I mean, once you get a price that you feel that you can make a profit on the house, if you close quickly, get the work done quickly, it's always going to be advantageous. You're paying less interest on the loan, less taxes on the property, less heat to heat it, less of everything. Other benefit is there's no problem with a market changing. We've been through multiple markets, Paul, you and I, and seen ups and downs in the real estate market, and you never want to get trapped in a declining market.
Absolutely.
And it works the other way. If the market's going up, sometimes it's good to delay it. But if you identify the deal and it makes sense, it's safer to just get it done quickly, close on it, and the value of it.
And it always seems like, I don't know if it's just me, the market going down is always a longer slope than the market, in time-wise, than the market going up. It seems like when the market goes down, it's this long, progressive, slide to the bottom. I mean, there's that initial hit, but then after that, it just goes down and down and down, where when it goes up, it goes up like a roller coaster. You're on this 45-degree angle going up, and then all of a sudden that time frame is much shorter. What's the common paperwork that's associated with a private mortgage?
Pretty easy. I'd like to just talk to you over the phone, sometimes meet you. It's a 2-page application, and sometimes we ask for tax returns to see a better picture, but it's a really simple process.
Wow. So that can all be done within a couple of days, right?
It could be done in one day.
Wow.
If you had the time to meet, you could fill out the application in front of me, or email, and we can get it done very quickly.
And what's the repayment schedule? What's the typical repayment schedule if someone borrows money? Do you charge monthly, semi-annually? How is it?
That depends on the deal. In some cases, there's no payments. It's pay at the end. Actually, in most cases, it's that way because they're short term. It's not even worth setting up payments for. But in some cases, when it goes a year, we may, and depending on the equity, we may ask for payments once a month for 12 months. Again, it's a per deal.
Case by case basis.
Yeah.
Wow. So that must be nice too, because especially if there are no payments until the end, 6 months or 1 year, whatever it is, that's more money that the borrower has to use towards the investment, and they're a little more liquid. And at the same time, for you're not involved in this accounting stuff where you have to start, debits and credits for people's payments. You're not the Visa company now who has to keep track of all this stuff, right?
Yeah, less checks to write, less paperwork for everybody, and it usually works out the best that way.
Now, who usually prepares all the paperwork associated with a private closing?
Usually a law office would prepare all that paperwork, and it works best if you're doing it when you're purchasing the property. Otherwise, you're going to go back to an attorney, set up another closing. If you purchase the property prior, then you got to do it twice in essence. But if you are talking to a private money lender up front and you do it at the same time, it's just the cost of writing a mortgage, which is small. I think it's $200. Most law office charge $250 for that.
Oh, yeah, that's reasonable.
Yep.
As compared to just the appraisal fee alone.
A commercial is $400 or $500 at least.
Yeah, more. That's really conservative because like I think a 3-family house now, the average appraisal is like $600.
Yeah.
And $450 for a single family. So that alone is worth to a potential buyer. That's less money that they have to take out of their pocket because you're essentially doing the appraisal, right?
Correct.
Based on your knowledge. What happens? So let's, and I know you had a couple of them, and I have to ask this question for the audience's sake. Someone gets into one of these things with all the best intentions. You've schooled them, you've looked at their deal, they like you, you like them. It seems that the deal will work, but something happens. There's something kooky. It always happens in life every day, and these folks have to go beyond the due date. If the loan is due in 6 months, what happens? What do you typically do in that situation?
Well, nobody wants to be in that position, so we always try to work with the purchaser of the property to either extend the loan. Sometimes we ask them to pay the interest for let's say it's a year loan. We ask them to pay the interest. We give them an extension for 3 months to get the deal done. Nobody wants to foreclose, so we do all we can as long as the customer is communicating. Right. That's the biggest thing. And I can speak for banks too. Banks will work with you if you're communicating. If you go underground, shut your phone off, don't speak with them, don't answer their letters, they're going to think the worst and send out whatever means is necessary. Sure. To recover their asset.
That makes sense because they don't want to get burnt either, and they would rather hear from you than not hear from you. Because we had that one a couple of years ago, and it was again all the best intentions. The septic system ended up being on the neighbor next door's property, and that threw things off a little bit, and we had to negotiate. The owner had to negotiate with this neighbor to get that straightened out. And point being is stuff happens every day. Unforeseen things happen in life. That's why they call it life. So it's nice to know that even if you went over on a term, payback term, that you can either renegotiate or try to work your way out of the problem.
We may ask for payments at that point. Let's say they've gone 10 months and have a problem like a septic on a different person's property, and they need 6 more months to rectify that situation. Sure, we may say, all right, from now till the next 6 months, we're going to want payments for that, or whatever. Work out whatever we can with them to, we certainly don't want to take anybody's house. I'd rather not even get involved with that.
Yeah, and that's expensive, and it's ugly
for everybody.
Yeah. I mean, it just doesn't make any sense. Well, that's some great information because I'm sure after the show we're going to hear from some people who are interested in this kind of financing. Of course, we're going to give John's contact information at the very end of the show, so please stay tuned for that to happen. John, let's shift the conversation a little bit. What purchasing properties? There's properties that people don't want anymore. There's situations where people inherited a house, they come from a different state or even in-state, doesn't really matter. It's nice to be able to watch TV and say, oh boy, I'm a regular person and I work 9 to 5 and all of a sudden I'm going to flip a house. The reality of that is very difficult unless you have versed in the construction trades or, people that you could pick up the phone, and then of course you have to find out what the value is. But there are a lot of folks that just want to sell the house as is. Look, I have a house. It was my aunt's. It's loaded with stuff. I don't want to go through this house and clean it out. You do purchases like that, right? People that can call and say,
oh, yeah.
Yeah, I mean, it makes sense because, they get and in reverse, the same rules apply to them now, because if someone calls and wants to dispose of this real estate, you can give them just as quick a closing as you could a private money borrower, correct?
Yeah, I mean, since I'm one of the owners at Keller Williams, we can handle all of their real estate needs. In some cases, it's not to mess with the property. Somebody comes through or a referral and wants a hard money loan to fix up their aunt's house. I may say, why bother? If you're not from the state, they're really cracking down on people doing it without licenses in this state. You need a contractor's license to do so. So a lot of times I'll advise them, you'll make less money, but it's no aggravation. We can put it on the market for this price for you. And I have plenty of agents at the office that could handle that and would be happy to handle that.
And that's you just struck on a key thing. Yeah, a lot of the people that flip, people watching HGTV and Flip and Flop and all of these shows on television that I can't stand watching, because to me it's so unrealistic. I look at what they do and it's just Hollywood. It's just theater. But a lot of people don't realize in Rhode Island, you have to be a licensed contractor to flip a house. Rhode Island General Law 565-1. I know that because I teach that class. And if anyone who sells a house for a profit within 1 year has to be a licensed contractor, by virtue of the fact that you have to give them a warranty on the work that you've done. Obviously, if there's no work done in the house, you don't have to be a licensed contractor, but who buys a flip and does absolutely nothing to it? And that's where the problem is. And a lot of folks don't realize that. A lot of real estate agents don't realize that. When one of their clients calls them and says, hey, look, I want you to sell my house. It's a flip. I bought it. I put work into it, and I want to put it on the market for XYZ. A lot of the agents don't understand that they should be asking that seller if they have a contractor's license, because later on, if there's a problem, there's a liability that can come back on the agent as well. What is the typical, you and I have flipped a bunch of properties over the years. What's the typical work? I mean, and of course, I know every situation is different. But in general, if you buy a house that's just been foreclosed on, or if it's a flip property that someone wanted to dispose of in a hurry, what's the usual work that house needs to make it marketable?
Before I answer that, I want to talk about the other subject you mentioned. A lot of times homeowners will finish basements, and we see that from the real estate end a lot, where the appraiser will ask, was a permit pulled for this work? And the homeowners have to, say no, there was no permit pulled.
Sunday afternoon improvement.
Correct. Yeah. And a lot of people will do that in their homes, but if no permits from the town were pulled, the appraiser may not let that go. And you may have to go in after the fact, try to get permits from the town. And as you know, when the property is finished, you can't see behind walls. Towns become very tough on wanting to deal with that and saying that this is up to code, because they don't know what they're looking at. So it's a difficult situation for anybody trying to tackle work without a license.
Yeah, and that's a good point, because now with the advent of buyer's brokerage, and for our audience who don't know what buyer's brokerage is that you can hire, as compared to many years ago, you can hire an agent. Your agent represents you, not the seller, if you're looking to buy. And the agents now are doing a lot of research on properties that they never did years ago. They're, if it's a 3-family house, the agent is going down to the building inspector's office and asking for a zoning certificate, and come to find out, oh, guess what? It's really a 2-family house. It's not a 3-family house, and there's a whole nother host of rules associated with turning it into a 3-family house. I think we had that one a couple of years ago where it looked like a regular everyday 3-family house. There was fire escapes. There was 2 means of egress and ingress for fire reasons, and had a hardwired smoke detector and everything else. But come to find out, the town came back and said it was a 2-family, and in order for it to be a legal 3-family, we had to put in a sprinkler system, right, which would have cost thousands and thousands of dollars. So we were better off just selling it as a 2-family, right?
Yep.
So you get that every day with the permits. So these agents, you mentioned the finished basement. People who put up their own swimming pools, people who finish the basement, people who install their own boilers and things like that. The realtor may have in the write-up, new boiler 2 years ago, and then all of a sudden there's no record of the permit down at town hall. So those are red flags. But the common flip, what do they basically need? Just kitchens and flooring and cleanup. Is that basically the way it goes?
Boy, I've seen everything from a person gutting the house to just painting it. So, but I'd say the average is they're doing kitchens, bathrooms, painting, floors. That's, would say, the average, but I've seen the full spectrum.
Really? So, and of course, depending on their level of expertise in flipping a property, and we're going to have a show completely dedicated, folks, on just flipping real estate, because there's a whole bunch of stuff in that subject that has to be covered before someone decides to write the check. But the typical work that's done by a flipper is done based on their experience in that market. And what I mean by that is that you don't take a house that was a 1950s Cape that was designed for first-time home buyers and put in $20,000 kitchen cabinets and marble floors and specialty woodwork. And I think a lot of that has happened by inexperienced people who they watch HGTV, and then all of a sudden they say, hey, I just bought a house over here on so-and-so street, and they really, from the get-go, they're going to lose money because all they really had to do is just bring that house up to a certain standard for another first-time home buyer, because now the average first-time home buyer can't afford that house because of all those improvements, right?
Or it won't appraise.
Or it won't appraise.
I mean, the area dictates what the house is going to sell for. So, in some cases, you have to really determine. You can't just go in as a blind slate and say, I'm going to redo everything. You have to look at it saying, what am I going to buy it for? What am I going to sell it for? What can I get away with? And I don't mean to say that somebody should do a poor job of what they're doing, but not tackling some projects because a kitchen is a few years out of date. If it's 40 years out of date, maybe. Right. But, if it was put in 8-10 years ago and it's a little dated, not, maybe the choice would be putting new counters on and pretty tile behind it or something on that measure rather than taking the whole kitchen and ripping it out.
Right. Yeah, and I think back on my first house, my first single-family house, it was a 1950s Cape, and it had plywood cabinets, and it had a linoleum floor, and it had the pink, tile in the bathroom. And we got kind of into a bidding war because it was in the right location. We really didn't need a house with brand new cabinets and marble floors and tile and all that stuff. I eventually did that work in the house, but I think a lot of investors lose sight of that. They feel that they have to go in and gut the thing from head to toe to make it an HGTV house, and you really don't have to do that. So, right. Well, we're going to take another quick break. We got 9 minutes to go here on Real Estate Pro Talk, and we will be right back with John Somyk.
Real Estate Pro Talk is a live radio talk show dedicated to educating its listeners on the entire spectrum of real estate matters. Part of the American dream is owning a home or investment property, or perhaps even becoming a real estate agent yourself. Paul Vanas and his team of real estate professionals have over 250 combined years of experience in the industry. In other words, we can make it happen for you. Why go down the road less traveled when we can put you directly on the real estate superhighway? Whether buying or selling in today's complicated real estate market, or if you just need advice about jumping into the real estate business for a career change, you'll need a decisive edge based on experience. Call Paul Vanas at 401-265-6144 for a free, no-obligation consultation. That's Paul Vanas at 401-265-6144.
And welcome back to Real Estate Pro Talk on this Friday afternoon, November 1st, 2019. It's 8 weeks away from Christmas already. I can't believe this. You know, my father used to say life is like a roll of tissue paper. The more you use, the faster it goes around, and I used to laugh at him, but now I find I'm using all of his slogans and sayings, and wow.
Using all the tissue paper.
Right, it's crazy. Getting back to the flips, John, how many? So if you're loaning money to these people, they're turning one house into another house, into another house, and so on and so forth. What's the average number of flips that your investors do every year? Is it 1, 2, 5, 10? What?
Oh, boy, I can't say there's an average. I deal with customers that do one house every 2 years, and then there's some investors that I know that are doing 15 to 30 houses a year. Wow. It depends on their level of experience and how many people they have to do the work. But I always advise somebody to start slow. A first-time investor shouldn't take on a complete gut job. They should look for a house that needs a little bit of work where they can spruce up, work there on weekends, at nights, or whatever they need to do, painting, do the stuff they can do themselves, learn the process, and get out of it quickly. I'm not going to tell a first-time investor to go gut a house. There's just too many things to learn. Yeah. Starting from that. Yeah, and that's good advice, because I know someone who, they're a close friend, that their parents passed away. The father died a couple of years ago, and the mother just recently died, and they had the mother's house they were going to dispose of, and I basically. They were gonna go through this like the whole soup to nuts. Now, first of all, he's a police officer, and his wife's a school teacher. Neither one of them, they're good with maybe a screwdriver and a hammer, but neither one of them are in a position to start going in there with a crowbar and a sawzall and start taking walls down and everything else. And they saw the house as an opportunity to basically become an HGTV house. They were going to film this thing before and after, and they called me in for my opinion, and I basically told them to sweep the house out and put the house on the market as is for maybe $15,000 less than what they were going to eventually market the house for. And they were thinking, "What, that $15,000? Paul, you're telling me to let go of $15,000?" I said, "Yeah, but you don't understand. It's probably going to cost you $20,000 in time and materials to get that $15,000. So in the end, 20 minus 15 is what? Minus 5. So it doesn't make any sense. A lot of people don't look at the time element, but that's a big factor in real estate. How much time are you going to take out of your life to put into that? Yeah, well, yeah. And of course, we only have so much of it, and especially if someone's working a full-time job, if they're working 9 to 5, are they gonna? And especially, it all depends on your age too, because when I was in my 20s, I was going to work on these things at night and coming home at 2:00 in the morning with plaster dust in my hair, and now I'm in bed by 10:30 with plaster dust in your hair. Yeah, right. I don't want to do that kind of stuff anymore. I'd rather call a guy. But those are the types of situations you must see all the time where people have these high expectations, right? They have, they see the stuff on TV and they see the stuff on the internet, and all of a sudden they think they're going to retire off of one house, and that's hardly the case, right? No, it can absolutely be a fun business to get involved with, but it's also a lot of work. It's just like any other business. If they want to make a living off it, it takes time to assess the purchases, assess the work, and put the time in to make it all happen.
And again, you see these television shows that kind of make this look like it's simple, and I think what they overlook is that this is a business. It's just like any other business. It's just like if someone said to me, Paul, you're going to open a restaurant. Wow, I need a location, I need equipment, I need a chef, I need employees, and it's the same thing, only on a smaller scale. So, and I think just as much thought and just as much work has to go into it. So you really shouldn't take it lightly. Certainly if you have some experience in construction, it's good. But if you're looking to just create, I know I found some people, they're artsy. And they want to create, and I've always found that art does not equal money. Art, I tell people, if you want art, go to RISD. You become a great artist, but don't start reinventing the wheel. We got about 2.5 minutes to go, John. Before we get into our closing segment, how's the market? How you guys doing over there, Keller Williams?
The market's been great. We've had a run since 2011 till now. We've had a straight gain. The last year, it's leveled out, and I expect the gains to be less, but I still think we have 2 to 3 years left on this real estate market.
Wow.
Possibly more. You actually provided me a chart going back 40 years of real estate, and if you look at the chart, it really shows how, all the conditions are right, too. We have low interest rate. We have low inventory still, especially in the multifamily area and the prices under $300,000. There's still a low inventory of that type of product. So that's the product that's really moving. But in all ranges, it's still moving.
Yeah.
A lot of people get scared as we approach a peak of a real estate market. I think we have a couple years at least left in it. And that doesn't mean it's going to drop. I just think it's, I think it's a market that's going to continue for a little bit. I don't see anything in the near future that's going to affect it.
Wow, nice. Well, that's that steadiness that it evens out, so it's more of a normal market from here on in, which would be nice. So we got about a minute to go, John. Do you want to give the audience your contact information, phone number, and email address?
The best place is to call at Keller Williams at 333-4900. Or to email me at jsomyk@kw.com. And that's the best contact number.
That's great. Well, John, thank you for coming in today. This has been really informative. I'm sure the listeners are enlightened because it's a subject that's rarely talked about. It's like it's the best kept secret. Next week, we're proud to have Tom Kravitz, who's the town planner from the town of North Smithfield. And Tom is going to talk about the planning process and what one has to do to fill out an application and ultimately what's good for the city or town. So having said that, I thank you for listening, and we will talk to you next week. And again, my number is 401-265-6144.